Scott Riley, the market update desk in Mortgage One. We start the first full week of December. And guess what? This week is jobs week. So we have a whole lot of action in the market, data and information coming in. And our gut instinct is I think we're really going to like the end of the week. Now, we've had, I don't want to say a record improvement in 10-year bonds in mortgage backed securities, but wow, we've had an extraordinary 3 week run, and buyers should be really happy with what's going on in the market. Let's see what's shaking out here in the world. So on Friday, we had Fed Chair Powell come out and give some comments. In one way, he was taking a victory lap. So Chair Powell acknowledged and welcomed the slowdown of inflation. And for the first time, he recognized or acknowledged the 6 month run rate through October, because that's what he had been talking about. And that was at 2.5%, not too far off their stated goal of 2%. So this is a good indicator that they're recognizing where we are and maybe making some appropriate adjustments in Fed policy. It also appeared Fed Powell tried to take, like I said, a victory lap, stating the forcefulness of our response to inflation also helped maintain the Fed's hard-won credibility, ensuring that the public's expectations of future inflation will remain anchored. Yeah, they're hard fought win. Well, there's a lot of things the Fed didn't do that it should have done late on coming to the party. So there's a little bit of self-boasting there that may not be really applicable. Now, lastly, what he talked about and is a way of kind of gaming the markets and giving them a little bit of crutch to stand on if they needed it. He indicated it would be premature to conclude with confidence that we have achieved sufficient restrictive policy or to speculate on when policy might ease. We're prepared to tighten policy in the future if it becomes appropriate. Wow. Now, this is in stark contradiction to what our market is telling us. The markets do not believe this whatsoever, and that is evidenced by the market rally we've been under for 3 weeks and the Fed future possibilities of rate cuts as soon as March. So trying to cover their hind quarter, I think, for a little bit. Now, some other things happen in the market is gold hit an all-time high of $2,100 an ounce, record high. So we've got a lot of action happening in the market. The Dow, Nas, and S&P are either neutral or down today. This is all leading into people waiting for the JOLTS report and employment data. So there's going to be realistically some profit taking, which we're seeing right now, slightly in the mortgage-backed security market. Some traders are taking some money off the top, waiting for the reports to come out. The mortgage-backed securities are bouncing off what we talked about, a real tough customer in the 200-day moving average. So now we did bop above this slightly during the day, but now we've come down about 20 basis points from our top end. If we can keep hitting up against this and breaking through it, there is a specific channel that's forming that shows an upward trend in mortgage-backed securities, and we could definitely be in the works for even better rates. This is followed by what the channel and trends look like for the 10-year Treasury. The 10 years at 4.28, our downward resistance is 4.02. So we again have this channel showing us that we could sustain these better rates, which wouldn't that be fantastic for everybody? Later in the week, we have, a lot of action going on, just a lot of stuff going on. Tuesday, we have the ISM services and JOLTS report. Wednesday, mortgage applications and ADP employment. Now, ADP employment's expecting an increase of 128,000 private sector job creations. Thursday, initial jobless claims and continuing claims. We're going to watch this really, really carefully as there has been a specific uptick in continuing claims. And last week was a holiday week, so it didn't give us the full picture of 5 days. So we're expecting an uptick not only in initial claims, but also continuing claims. Friday, the grand slam hits, which is the all-important BLS jobs report, or as we've noted before, the BS report. Now we're expecting, or the market is expecting 180,000 new jobs, 155,000 private jobs, and looking at about a 3.9% unemployment rate, which would be flat. So we've got a lot going on. We're going to keep you up to date. Give us a call with comments, questions, anything we can help you out. Do us a favor. Go ahead and follow us, and subscribe to all three of our channels, Facebook, YouTube, and Instagram. We would appreciate that. Thanks so much. Have a great day.